The All Monies mortgage clause. Let's have a look. Hello everyone, Florian Heise here, and welcome to another episode of Heise Says. I'm relaxing on Sunday with my stein of coffee, and a viewer sent me a link to a video discussing the All Money mortgage clause. Now, this is a clause that a lot of people may not be familiar with, but it can have some very drastic implications, particularly if you do your banking or your lending with the one organization. And actually, before we jump to this article, let's just do a little bit of diagramming to set up a scenario which I would consider a reasonably average scenario for someone. So here you've got your home, and there's a mortgage associated with that. Okay? And you've got that with, we'll make it orange because why not? Which bank? Got that with one bank. And then, you need to get, that's your first thing. Or actually, no, even before that, you have your Dolomites account as a kid. So, you're embedded in the Combank. You're embedded in their system. They love it. They even give stickers to my children when I visit, because I'm with the Combank. Not that it matters. For now, anyway. For now. So, say you've got, your Dolomite account, then you get your home loan. And then you've got your personal credit card. Then you've got your car loan, all with the same bank. All with the same bank. And you decide to go on a holiday too. So you got your holiday personal loan with them as well. And then you've got your super as well. Why not? Because you can see it all on the one screen. And you've got all these products with them. And you're starting a business. Fantastic. Put all your accounts in their name as well, all under the one bank, because then you can see it all under your biz account. You've got the biz credit card, all with the one bank. Now, what's the point of doing all this? Well, it's convenient for you. It's convenient, but it provides, let's say it rings you in. Oh, wait, I forgot. What else do people do? Sorry, share trading. ComSec as well. What else? What other products can they have? But you get the point. The idea is to entrap you, or just to make it so convenient that you'll go to the same bank again and again. And by doing that, when you need to look for a new product, a new service, you're more likely to go to the same bank. You're entrapped in this ecosystem, and they're encouraged to get you to sign up for one account here, another account here, as many products as you can. Business credit card here, a personal one here. Whenever you go to the website, how often are you bombarded with personal loan, this is get a holiday, borrow. But the idea is to get more of your products with them, so you're more likely to bank with them. But here is the issue. Some certain conditions under these contracts can cause a problem. So I'll just jump back here to the diagram. Let's say your home here is in a market that the bank is at risk. Or maybe, actually, we could also say your home or your business loan. Now, the story I was told was there was a gentleman who was in airport security, manufacturing all the equipment for the security and those type of things, like I think the trolleys and that type of stuff. And what happened was, just after September 11, the bank said, okay, we want out of this business. We want to reduce our risk. You need to pay off your company credit cards. You need to pay off your home loan. We want out of this business. You've got, how long you think? 90 days? 120 days? 30 days before we put you in default. And the reason I know this story is because a mortgage broker, friend of mine, was contacted by this client. He was contacted by this client because they'd pretty much risked the bank. It was one of the big four. Contacted this broker. So the broker had to put a deal together to refinance all his different products. Because once you go in default, with your home loan, no one else will refinance it. So they may take it off you, sell it for whatever they can to pay down your debt because they want to get out of that market. Because the banks can do that. It's that fair. So they had 30 days. So my friend the broker, he managed to find a solution for them within 30 days and, get it all good for them. He was the hero. And he rang up with them every couple of years just to see how they're going. Oh, I can get you a better deal here. Let's have a look at this. Business relationship. But here's the kicker. What do you think happened? What do you think happened a couple of years down the track? The bank that screwed over this business person, that threatened to kick him out of their home, chased him saying, we want your business back. We want your business back. We'll give you this fantastic interest rate deal on all your debts and your credit cards, everything, if you come back to us. What do you think the person did? He went back to him. He went back to him. After they put everything at risk and gave him 30 days. 30 days. So, guys, this is the thing. These banks are not our friends. Don't ever think they're your friends. They're business people. They are risk managers. They want to reduce their risk. If you're in a market that's overly exposed to risk, or if it's a sector of the economy that, we want to reduce our risk in that sector, we need to, you either need to pay down your debt. One thing I'm worried about, I need to do a bit more research in, is if our housing markets fall significantly, how many people are going to be forced to pay to ensure they have the correct LVRs? How many people are going to have to suddenly stump up with a whole bunch of money, or if the bank's going to start sending people into default. We already have people in mortgage arrears and stress now at 1% cash rate, guys. So that's the issue with the all monies clause. Now, fortunately, credit cards are now considered unsecure, so, private people aren't going to worry about the bank claiming that. But there is another issue to consider, another clause, another right that the banks have had since 1860 in English law, and that is the right to combine your accounts. So we'll jump back here to my sketch pad, and we'll add another one. So say once again, I'm just moving that back. Say once again, you've got a series of bank accounts with the bank, and the bank decides, maybe you've got your personal savings here, and then you've got, just for argument's sake, you've got a liability with your business. Savings, we'll say, is in this, and your liability is in that. And they're going, okay, no, we're sick of that. We want to combine your accounts, so we'll take that risk away. So we'll just take that off there. So you still owe us that debt, but that savings gone. That savings is gone. That's just one example. If you have a whole series of different accounts, positive, negative, debt, credit, they can combine it all together. They have the right to combine it all together. And this is a right that they exercise, when an account is overdrawn and another is in credit. So say you've got a savings account here and you've got another account here. How can that mess you up if they start moving money around, they start combining accounts and just causing problems? But let's have a look. Let's have a look at what the bank's general obligations are under their code of practice. And this is 2013, and we'll have a look from its clause 19, what they'll do, what they will do. Because remember, it's not your money, it's the bank's money. It's the bank's money. So account combination 19. We will inform you promptly after exercising our right to combine your accounts. There you go. In exercising a right to combine accounts, we will comply with any applicable requirements of the Code of Operation for the Department of Human Services and Department of Veteran Affairs Direct Credit Payments. 19.2. We will not exercise our right to combine your accounts in connection with amounts you owe in respect of credit facilities with us, which is regulated by the National Credit Code. A. While we are actively considering your financial situation under Clause 28 or under the hardship provisions of the National Credit Code. We may ask you as a condition of not exercising our right, remember it's their right, to combine your accounts, that you agree to retain funds in an account until our decision or your application has been made. Or B, while you are complying with an agreed arrangement with us resulting from our consideration referred to in clause 19.2. I mean, how many times, there we go, that's it. How many times have you signed a document, signed a mortgage, signed up to something and not gone through it in greater detail? I mean, let me know in the comments if you are aware of account combination. If they have the right, if you realized your bank had the right to combine your accounts. And this is why people are saying you should do a different model. You know, I mean, let's jump back. We'll use a cube sub to make it exciting. Let's say you've got, I mean, you need to get professional advice for this, guys. You shouldn't be talking to someone on YouTube, but you need to have different silos for your different aspects. And I mean, I'm just as guilty as anyone else because it's so convenient for me to have everything with the one bank, and I'm now getting worried about it because I don't want it. I don't trust them. The more I look into all this stuff, the less I trust them. You know, and this is not even in regards to any of my concerns now with the monetary system or monetary policy. It's just the fact that they have the capacity to combine your accounts. They've got all money clauses in mortgages. They're not our friends. I mean, you have your personal savings at Bank A, and then you've got your loan at Bank B. You've got your business at Bank C. You've got your investment property where you've paid $310,000 above reserve because you're that special, like someone in an article today, in Bank D. So that if for argument's sake, Bank A, I don't know why they do this, or they get an issue, you know, you've got your huge big savings account here, and you got your tiny little bit overdrawn on this account here. They can't, or maybe let's say in another one, you're in the, you know, your business, you're waiting for a payment, you're in the construction game, and someone hasn't paid you for a while, so the bank is getting scared of your business. This bank, hopefully, shouldn't be able to withdraw money from your personal savings and take it out. Whereas if it's all in the one little fence, they can get to it. So guys, let me know what you think about all this in the comments. Were you aware of the account combination and all monies clauses? Have you gone through your mortgage with a fine-tooth comb? Do the banks talk you through all of these specific issues when they signed you up to these products? They didn't tell me there was inherent risk in having all of my finances and savings with the one institution, that they could claim it for other expenses. They didn't. Anyway, guys, thanks for watching. Please like, share, and subscribe, and I'll see you all next time. Have a wonderful weekend.